If you are considering taking on investors, what would be your top advice?
You have to understand the risk model, right? So you're asking these investors to invest in what? Okay, what are their risks? What are your risks? And then what's a reasonable return that they should expect for the risk they're taking? Okay, and you always have to consider they're investing this money because they want to make their money back and a return.
Hello and welcome. I'm your host, Raquel Graham, and you are listening to Entrepreneuring, the show that takes an honest look and a deep dive into what it means to build something from scratch and what it takes to keep that business going. What makes this show different is that we do not just look at the unicorn businesses or the billion-dollar valuations. I am an entrepreneur myself, and I love the stories of all size businesses because there's just so much in common. It doesn't matter. You can learn from someone who is bootstrapping, and you can also learn from someone who is scaling a large operation because the challenges are all the same. The scale is different, but the core experiences are often the same. So, the goal of this show, I hope that our listeners will be inspired, that you will learn something, that you are informed, and that will help us learn together because when we learn from each other's experiences, I find that that is the best way to learn. So, no matter where you are in your path, I do believe that this show will be for you. And I'd like to start the download this week where we left off last week, which if you tuned in, I was talking about this is Black Business Month, first of all. And last week, I was asking us to consider really being deliberate and strategic and intentional about spending money to support Black businesses. And we were talking about the Target boycott at the time. And as the numbers have come out, as I mentioned, at the beginning of that boycott, the first stat that came out was remarkable, just to learn that Black people spend $12 million a day with Target. Now, since the boycott, their valuation has dropped in the billions, and the revenue has dropped by $500 million. So, what's in the news just a few days ago is that the CEO stepped down. But I ask that we read a little bit further from just the headline because he was also made the executive chairman of the board, which is an incredibly unique move for a corporation that has lost so much money. Usually, the CEO doesn't get what looks to me like a promotion. So I'd like us to be very aware. And once again, the call to action around considering shifting some of your regular spending and supporting a Black business. And yes, it is not as convenient, but as we know, the times are very critical, and this is the way for our Black businesses to survive. And the second thing I spoke about last week, but I really glossed over it because the judgment did not come down until the day before the show. And now if you are on social media, it is the talk of social media. And I am talking about Uncle Nearest. So if you are not familiar with Uncle Nearest, let's just talk about it for a little bit because it's been one of the brightest success stories in the community. It is $1 billion whiskey brand. It's the fastest growing in history. And it's led by a female Black founder. Her name is Fawn Weaver. But the story around the brand is what is fascinating because it was built around a man named Nathan Green, who was a slave, and he was the first Black master distiller. And what's critical is that he taught distilling techniques to Uncle Daniels. And we know how I'm sorry, not Uncle Daniel, to Jack Daniels. And we know how successful that brand is. So, unfortunately, we learned that last week they were put into receivership and social media has gone wild. Yes, there is a large $100 million default. Yes. But Fawn, the founder, is under a gag order and she cannot explain her side of the story. So I ask that we, at least for me, I'm reserving judgment because we just don't have enough information to really judge. But when I read the comments, what really stands out to me is that what I know for sure is that as an entrepreneur and understanding the stats around private equity and venture funding, they are very bleak. And what I mean by that is very few, we're talking under 3% of Black businesses are in this arena of venture capital or private equity. And if you don't know a lot about this world, which I would suspect many of us don't because it's not something that is legacy in our families, it's not, many of us will not have a relative or maybe even a mentor in this space. It continues to be a space where a lot of Black businesses have a very hard time getting entree. So if we don't really understand it, it's very hard to judge it. I do not think that this story is going away anytime soon. So I thought this would be the perfect opportunity to invite my guest today, who is very much a part of this world. His name is Craig Vaughn, and he is the founder and manager of Vaughn Capital Advisors, a mergers and acquisition advisory firm that has closed more than 100 deals in media, sports, and technology. He is also the founding partner of Queensbridge Fund that he started with Nas. Yes, Nas the rapper. And they invested very early in the unicorns like Lyft, Dropbox, and Ring. So this is a special guest because I am so excited to talk about this because it is rare from the community that you can really get someone who completely understands it. He also worked at Goldman Sachs and has done deals with Essence and the NBA and Major League Baseball. So this is absolutely a treat. I'm really excited. And so when we come forward, we will have Craig Vaughn. I am Raquel Graham. You are listening to Entrepreneuring, and this is KBLA Talk 1580. This is Raquel Graham, and you are listening to Entrepreneuring. As promised, I am here with Craig Vaughn, who is the founder and managing partner of Vaughn Capital Advisors. Welcome.
Thank you, Raquel. Good to be with you.
So excited, so excited. So you heard my intro, right? So you're going to teach us a lot today. But before we begin, let's go back. Where are you from? How did you get into this field? And why did you start your own firm?
Wow. Okay. That's a lot to chew, but I'll give it to you the way it happened. So I was born in New York, born in Brooklyn, and lived in Brooklyn.
Me too.
Were you born in Brooklyn
Yes.
also? So
Flatbush.
we're still learning.
Where are you from?
Bed-Stuy.
Oh, okay.
Yeah.
Look at that. I didn't know that. Yay.
So I was born in Bed-Stuy. We moved to Massapequa when I was about 3. And Long
To
Island.
where?
Massapequa.
Oh,
Long
okay.
Island.
Yes.
Yeah.
Mm-hmm.
And then I moved to Texas when I was about 8 years old, and grew up in Texas. Went to University of Texas, and one of the things, and I know we'll come to this later, is that I grew up watching a ton of television for lots of reasons that we may or may not go into, and I remember being fascinated by who controlled what I was seeing in this box. And I'd see all the names. I'd obviously watch the shows. And
You mean credits at the end?
The credits at the end. I see all these names streaming down. I also played sports, and we'd practice in the afternoon, and our coaches were dads, the dads of the kids on the team.
Right.
And my mom worked all the time, right? And I was like, well, how are these guys able to be off at 2:30 in the afternoon to coach us? And so I asked, like, what do you guys do? And every one of them said, I own my own business. I have my own practice. I own my own business. So I was like, that sounds interesting.
Right.
You got all this free time and you're able to do stuff with your family and all this kind of thing. And so that kind of started the curiosity and started my path toward what ultimately became my career and then Vaughn Capital Advisors.
Okay. So what made you start your firm?
Yeah.
I mean, I ask this question to all entrepreneurs because I'm just intrigued, because there has to be a journey that creates a spark. You either see an opportunity, a gap, or you just want to, be on your own. For me, I didn't like people telling me what to do. So
That's definitely part of it. So my resume is filled with sort of big and, dare I say, impressive logos, right? I finished undergrad. I went and worked at Nations Bank, which is now Bank of America. I learned capital markets and credit and lending there.
Okay.
Then I went back to business school at University of Michigan, and then I went and worked at Goldman Sachs. And that was a fantastic platform, great company. Worked on really inspiring deals for me. I was dealing with brands that meant something to me. So Sony was a client, the NBA was a client, Vodafone was a client. And so I learned big boy finance, like multi-billion-dollar deals, public offerings, et cetera, et cetera. But I still had a curiosity about how these businesses worked on the inside. And so when I left Goldman, I went to work for one of my clients, Sony Pictures. It actually brought me to Los Angeles.
Okay.
And the goal was figure out how Sony, who had music assets and a film production company, PlayStation, they made the Walkman, they had all these devices, right? And they had all this content. How could we marry all that together in a service? And so that was my job. And we figured out how to do it through a business called Sony Connect. And Sony Connect, just to break it down, was basically like Sony's version of iTunes and iPod.
Oh.
Right? And so they made devices and they had a store. And there's a reason why you have that expression on your face, because you've probably never heard of it.
I didn't, no.
Right.
Yeah, okay.
And so what I learned was that Sony was very good at hardware. What Sony was not was a software company. Apple was a software company.
Right.
And so they created a service that was driven by software that is now the de facto platform for
all of these different,
all of those things. But we launched it. I got a chance to run a part of that business. I was then recruited away to Fox to do something very similar, which was to figure out how Fox could make money off of its IP, intellectual property, otherwise known as shows, right? Like 24 and Prison Break,
right,
and those kinds of shows, how they could make money off of that in mobile.
Okay.
And as phones were becoming more sophisticated.
So you've always been on the tech side.
Always the confluence of tech and media and
right,
intellectual property.
Okay.
Always, always, always.
Yeah.
So I created the Fox mobile channel in partnership with Qualcomm, and we were one of 8 channels, and we launched on a platform called MediaFlow. And so I created the channel, and I had experience with this because I had done something very similar at Goldman where we launched NBA TV.
Oh, okay.
And so I knew sort of how networks work, and I had to program them. And so we launched that channel. I ran it for about a year and a half. And then I was recruited away to Creative Artist Agency. In Creative Artist Agency, people know it as a big talent agency. But inside, there's all kinds of business that takes place, right? Like deals are being done. And the agency was at a place where they wanted to participate in a more forthright way in deals that weren't specifically talent deals. And so my group was like, well, how can we take our connection to talent, our connection to capital, and our connection to operators, people who run companies, and package that together into new companies and new opportunities. So the greatest example that came out of our group was Funny or Die. Funny or Die was Will Ferrell and Judd Apatow. So they were the producers of content. We got a big boy management team, and we brought capital to that and launched a very successful media brand.
Okay.
It started on the internet, right? So the whole idea was distribution was flat. Anybody, you and I, can make a video right now and put it on YouTube.
Right.
We don't have to go through any gatekeepers.
Right.
I know we'll talk about that later.
Sure.
And so we were like, how can you use these emerging technology platforms to create lasting brands? And Funny or Die was an example of that.
Okay.
And then also, while there, we advised a former agent on buying the San Diego Padres. So it was a $500 million deal. My group put together the financing, the structure, etc. And so we advised on acquiring that baseball team for a former agent.
Okay, so the next question then has to be, how do you land into these kind of opportunities?
Okay.
Because I always say that when I see really successful founders playing in unique arenas, because it sounds like so many things that you did were really like cutting edge or charting new territory, right? So usually there's a mentor or a coworker or a boss, usually, that sees your talent and regardless of color wants to bring you along because you are an asset, regardless. of everything, right?
Yeah.
So then you get to really be on the inside and see what many don't see.
Yeah.
So am I onto something, or?
You are.
Okay.
I'm going to give it to you, though, in a slightly different way than I think would be apparent, which is, so when I came out of business school, I went into Goldman Sachs, and I didn't have a mentor. There were, though, a couple of gentlemen, interestingly, when I was interviewing for Goldman, who took a liking to me and said, listen, I think you could have real success here, right? And they were right, and I went to Goldman, and I had a good run. And then I ultimately decided that I didn't see a future for me at Goldman. It wasn't that I didn't see a future for me doing deals. And I still had a curiosity about figuring out how these businesses work on the inside.
Mm-hmm.
At a place like Goldman, you're kind of on the outside. Like, you understand how the businesses work, but you don't really understand how they work, okay? And then at Sony and at Fox, I was, like you said, I was willing to do work that was very uncertain. So Sony was making billions of dollars selling TV shows, selling DVDs, selling PlayStations and PlayStation games. That wasn't the business I was in.
That was the sexy side.
That was the sexy and money-making side.
Right.
So people there were, everybody's
sexy.
eating
They
over
go
there.
together.
Yeah, people eating, right?
Yeah.
The part I was in,
Was a hope and a prayer.
hope and a prayer,
Right.
nothing's defined, unclear how the revenue is going to get made, who's going to eat.
Right.
So I was willing to do
Right.
that. Okay, same thing at
So
Fox.
you already had the risk-taking entrepreneur gene.
Absolutely,
Right.
absolutely. And so then at CAA, very similar. Our group. So everybody thinks about CAA. They think about Will Smith.
Sure.
And they think about Reese Witherspoon and Jennifer
Absolutely.
Aniston. They don't think about what we do. And so we had to make something from scratch, which then led to Vaughn Capital Advisors, which was make it from scratch. I've always made it from scratch. But when I met my mentor was when I was ready to make it from scratch, really from scratch, and create Vaughn Capital Advisors. I needed someone to help me do that. I was very good at getting jobs. I was very good at getting important sounding jobs, lucrative jobs.
But to work for yourself.
But when I needed to do it as
and
Craig,
to launch,
it's a
different beast.
I needed some help.
And so you
I
had,
found
from
that
all
out.
of your experience, you had people who had already seen your genius and your style and your success to back you.
With one exception. My actual mentor,
Yes.
I met him probably a year before I was about to make radical changes in my life, right? I met him when I was 34, got married when I was 35. I started my own business when I was 35,
Ooh.
right? And he showed up as,
Oh my gosh.
as God does these things
Right on time. Yeah.
Yeah.
Because to start all of that, a new, oh my gosh, a new marriage,
Yeah.
when you're starting a company in that kind of uncharted water,
Yeah.
which means a lot of capital.
Maybe. I mean,
Well, a lot of capital for us.
yeah.
What would, seem like a lot for us.
Well, luckily, I had, as I said, I had done well throughout my career.
Right.
And so I had both intellectual capital and financial capital to get me going.
Okay, so you hold right there.
Okay.
When we come forward, more with Craig Vaughn. This is Raquel Graham, and you're listening to Entrepreneuring on KBLA Talk 1580. This is Raquel Graham, and you are listening to Entrepreneuring, and I am here with Craig Vaughn, who is the founder and managing partner of Vaughn Capital Advisors. Okay, let's hit it for us entrepreneurs. So what should entrepreneurs consider? Let's give a really brief description or understanding of private equity. I know that's really hard to do, and venture capital, which I think is what folks are most familiar with,
Sure.
right? So broad, and then we're going to talk about what you've seen in the industry. If you're an entrepreneur and you've seen the highlights and you think this is what you want, what are some things to consider?
Okay, let me tackle the first one first. So private equity is a pretty broad umbrella, but I'll give you sort of the three segments under the umbrella. So the one that most people hear about most often is venture capital. That's early stage companies. Sometimes they're pre-revenue. They're usually pre-profit, so they're not making a profit yet. There's no cash flow. And those are sort of the sexy names that you hear that grew out of venture capital, like Facebook and Dropbox and Lyft.
I actually did
Uber.
not know that a lot of them are pre-revenue.
Many are pre-revenue.
I did not know that. Yeah, okay.
And then there's growth private equity, which is a broad swath of private equity where the companies are mature. They often have 8 figures in revenue, 8 or 9 figures in revenue, even more sometimes. They're cash flowing, but they need capital to do something very specific. Sometimes it's buy another company, sometimes it's open a new business line, it's any number of things. Sometimes it's just a recapitalization. So you're changing one equity holder to another equity holder, right? Or a mix thereof. An emerging segment of private equity, and it's still private equity, is family offices. And so family offices are private equity individuals who have pooled capital and pooled resources to make direct investments in companies. And so there's a lot of sort of in between, but those are the 3 buckets. And the other bucket that's really available to companies that would be backed by family offices and companies that would be backed by growth private equity, of course, is debt. You don't normally see traditional bank debt in venture capital because there's no cash to pay back the debt. Right. But usually in growth private equity and larger family office backed companies, there's cash flow that could service traditional bank debt.
Right. Okay. So the second part was you're an entrepreneur, you don't really have much exposure to this, but it does look sexy, right? Yeah. Because unfortunately, we will either hear the highlights of how much money was raised or how much money came in the exit, right? Yep. And even that is complicated because what comes out of the exit is never what goes to the founder, right? Yeah. And that number can be shocking at times because you never really know what the deal looks like on the back end.
Absolutely.
Right?
Yeah.
And I have made it my point to, I follow all founders, not, any race, it does not matter.
Sure.
And there are such interesting stories, and I'm talking about white companies that may have a $100 million exit, and the founders will talk about, well, it was 3 of us and we each got $2 million. And that was eye-opening to me.
Sure.
Because, the devil is in the details of those contracts.
Yeah.
So what would you say, what kind of business, there's the type of business and then there's the type of founder that would be considered a good fit? And I don't even know if that's the right question.
Let me try to answer it this way. So there are a couple
or maybe it's what kind of businesses or what type of founders have you seen that are usually successful in that space? Maybe that's a better
question. I'll tackle it from that direction. So first, we'll go into the venture capital bucket because that's the one that people hear the most about, okay? There are a couple of things that are almost always true for successful venture-backed companies, okay? Number one, they are addressing or attacking a very large market. It's called the addressable market. Are there lots and lots and lots and lots of people who need this solution? Okay?
Because that would be the only way to scale.
It gives you the greatest opportunity to scale, right? I'll use a simple example, although not the best example. Everybody needs shoes. Mm-hmm. That's a big addressable market, okay? Not exactly for venture capital, but you get where I'm going with it, okay? So there's a big market. There is a way to disrupt that market. We hear disruption. It was very disruptive. So the way that market has been served is somehow going to get disrupted by technology. Okay, so a great example, there are 2, the taxi cab industry. It's taxis. Yeah. It's sort of an older market. You're in New York, the guy has a medallion, shows up in a yellow car. But with the advent of the smartphone, you got to actually do something that they used to do in Brooklyn when I grew up.
Oh my goodness. I say that, the gypsy cabs.
Gypsy cab, right. So now it's that model, hypercharged with a phone and navigation system, right? And so Uber and Lyft, among many others, said there's a way to disrupt this.
I have a question though about that. So whoever was the first mover, was it Uber? Let's just say it was Uber, so then Lyft comes along and they now are pitching to venture. What's that argument? Because Uber has already moved clearly a disruptor. I don't know that I know the difference. I take mostly Uber, so I don't really know
Yeah.
much of a difference with Lyft.
Yeah.
But I'm just curious. So
Yeah.
it's doing the same thing.
Yep.
And of course, there's always room for more than one. It's kind of who does it better, who's first mover, et cetera, et
And
cetera.
also what market segment they're going after, right? So just like in the soft drink industry, there's like 4
Right.
dark colas,
Right.
There's Coke, Pepsi, Dr.
Yeah.
Pepper, RC Cola is not around anymore. Same thing in all these markets. And the basic construct in venture for the way venture capitalists think about it is for most large markets, there's going to be a number 1, a number 2, a number 3, maybe a significant number 4, and then lots of others. Okay. And when they make their investment, they're betting, okay, this one's going to be the number 1, this one's going to be the number 2,
and that the
so
market
forth.
is big enough
Right.
to absorb all of them.
And so if the top one gets 40% market share and the next one gets 20% market share and the third gets 10%, so the investment and the ultimate market value of the company is going to reflect that market share. So we happen to have been investors in Lyft. What we understood was Lyft was actually going after a different market than Uber.
Oh.
Uber wants to, and frankly now is, deliver everything. Deliver people, deliver food. Uber Eats.
So that was part of their model all along?
Their addressable market is gigantic. They want to deliver anything that needs to be delivered, any logistic problem, they want to solve it. Lyft was pretty clear, we just want to move people. We want to actually be the gypsy cab, right?
So for those listening, what type of businesses or what type of founder would you say is a good fit? We're coming in on 2 minutes, so it's never enough time.
Yeah, so a good founder is one that has some track record, history, understanding of these markets. So whatever market they're going after, they've got some experience, okay?
Team matters.
Team is absolutely essential. And not only is the team good.
So they don't want to. So they don't want to see one person.
They don't want to see one person. They don't want to hear just about one person. They want to hear about a team and as much track record as the team has, and then track record together.
Right.
Okay. Is the team aligned? Are they aligned with the capital? Are they raising capital to pay themselves, or are they raising capital to grow a company? Right. Are they clear on the capabilities of the team relative to the capabilities they will ultimately need to grow that company, right? Because not everybody can do everything.
Right.
And so the capital is to bring in talent, to bring in resources so you can actually grow a billion-dollar company, right?
30 seconds. What advice would you give an entrepreneur, which we're going to say you must do your research, et cetera, if you are considering taking on investors? What would be your top advice?
Yeah.
And Craig will be back, by the way. I mean, we have to do many more of these to.
Right. I'd say the first thing is you have to understand the risk model, right? So you're asking these investors to invest in what? Okay. What are their risks? What are your risks? And then what's a reasonable return that they should expect for the risk they're taking? Okay. And you always have to consider they're investing this money because they want to make their money back and a return. Okay.
And that control, there is a strong chance that
you're giving up some control. You don't have to give up all control. At a minimum, you have to answer to someone now. Even if you go borrow from a bank, you got to answer to them about your financial performance. When you take on equity investors, you're gonna maybe have a board, you have quarterly board meetings, whatever the case. But people care about their money. They want to hear about it.
A lot.
They want to hear about it, right? They want to hear about it.
It comes at a price. It comes at a price.
Absolutely.
Thank you so much. Never long enough. We have so much more to talk about.
We do.
So
let's do it again.
Thank you. This is Entrepreneuring. And when we come forward, we will be talking about the takeaway from this conversation. Thank you.
All right.
This is Raquel Graham, and you are listening to Entrepreneuring. I hope you were able to listen to that last segment with Craig Vaughn. I know we never have enough time, but this is an area that I think it would be so great if we had more understanding about it. And I know a lot of entrepreneurs are listening. I will honestly say that I flirted with the idea of venture and private equity so many years. And I really didn't know much about it. I was over time, I was actually fortunate enough to have at least 5 friends who either had venture, had exits, or did not have good experiences. And each one of them, and I have to say they were all Black male, by the way, though. I didn't have any female references. And they all told me that if they had to do it over, and this is including the people that had an exit, that if they had to do it over again, that they would have done it differently. Private equity comes with a lot of strings, and it sounds so wonderful because you get so much money, and when you're a founder, you think you basically you know that if you could get access to this funding, that it would make such a difference in your company. However, there are just a lot of challenges, meaning you have to be prepared to work a certain way. And because you are an entrepreneur, there is a shift because you now, to a certain extent, you have to answer to your investors, whereas before, as an entrepreneur and a founder, you kind of just answer to yourself. I am not, I don't have an opinion about it. Now, for me personally, I decided not to go that way. And that came after a while, like years into my company. And I realized and I studied it and I listened to a lot of feedback. And a lot of that just has to do with the way you choose to grow. Some people are completely fine. And let me go back and say there is no right way. It's the right way is what works for you. Some people, they want that exit and they want to work like crazy for 5 years for that big exit. And some prefer to hold on as long as possible and grow slowly. And that's okay. It's just like when I talk about entrepreneurship. I mean, if you have a situation or model that works for you because you just are looking to support the income that you have from your business, a side business, it is enough and you're able to balance your life, then that is the perfect scenario for you. Some want to take a risk and grow, which comes with, its own challenges. It is really about doing the research, finding what works best for you. And it's really funny that Craig told a story about what made him curious about being an entrepreneur when he saw so many people, what they did on television and how come they didn't have regular job hours. I had the exact experience when I took a day off of work once when I was an investment banker and I saw so many people in Macy's one day and I had no idea that so many people were not in a 9 to 5. And that absolutely shifted. And I knew then that I wanted to be an entrepreneur. When we come forward, we will talk more about Craig Vaughn. This is Raquel, and this is Entrepreneuring. This is Raquel Graham, and you are listening to Entrepreneuring. This we will talk about now is the weekly reset, which is where I ended last week when we talked about considering and being deliberate about how we spend our money. This week, I want to talk about if we could examine our companies and think about all the elements that we can control. And when I talk about control, I'm not talking about equity or anything like that. I'm actually talking about the different elements of your company that you can control, like controlling your distribution or owning your distribution, owning your customer relationships, owning your brand narrative. These are things that, especially with technology now, the way it is leaning in the favor of small businesses, meaning that the technology gives us so much more help and we can do more. And so let me give you an example of what I mean. In China, the currently, and I'm not talking about what's coming, I'm talking about currently what's happening in China, is there is 24-hour direct selling. So it looks like TikTok, but it is direct selling to brand. So what that would mean is you would be doing and facilitating this selling that we see on TikTok or QVC would be your own brand. And that is what's coming down the pike. For us, it is already full throttle in China. And that allows you to control much more about your distribution, your customer relationship, your brand narrative. Now, TikTok is probably the closest to it right now, but you still are at the mercy of the algorithm, unfortunately. And I don't know what's going on with the algorithms these days because it seems to be changing every week. As a matter of fact, I'm certain it's changing every week because I'm on the updates on social and the CEOs are coming in all the time with these updates. So I do understand that, yes, there are always going to be elements that you cannot control. But what you can do is you can diversify a little bit more so that your you have your audience here, you have customers here, so that when one thing collapses, you it's everything is not all in one bucket. That is always one of the best things that any business can do. Now it's easier said than done, but so much is changing that it is worth it for a small business to look at as much as much as you can. What can you own? I have seen in this year alone 3 really prominent African American female-owned businesses take a tumble that was so unfortunate. We talked about Uncle Nearest. Pinky Cole has been very forthright about her challenge with Slutty Vegan. There was also 13 Loon, and they took a lot of investment dollars, and, it didn't end in the way that I'm sure they would have liked. And I just wonder if we really do more research and be more mindful before we actually come to the conclusion that that's the only way for us to grow. If you feel, set that that is absolutely what is best for your company, then by all means. But those are examples of companies that had a lot of money and whatever went left, went left. So that's not something that we like to see. And just consider that there are alternatives and moving a little bit slower, whatever works for you is what will work. Keep growing, keep going. I will see you next week. Cafe Mocha is up next. I am Raquel Graham, and you are listening to Entrepreneuring, and this is KBLA Talk 1580.